Okay, so great. So basically, as you all know, that psychology in the markets is one of the biggest aspects on how to become consistently profitable in the markets. And ultimately, it does make up of 80% of your trading consistency, and the profits you are seeing will ultimately not only come down to your technical analysis, but it also come down to your psychology and your mindset in the markets. Okay, so I've just created a little PDF, a little given some information on psychology. I've also included a psychology Word document as well that I've also put into the group. I'll just let a few more people in. Okay, so the first point is what is psychology? So psychology is basically everything that doesn't involve technical analysis and a chart perspective. So this can be down to this is all down to your emotions and your overall mindset. Not only does your overall mindset affect in general, it also affects in the market. So, for example, if you're feeling kind of unwell, or if you're feeling kind of angry or annoyed just throughout the day, these type of emotions and feelings you will also see resemble right onto the charts and in your trading history. It's just a known fact that does happen. So the first point would be actually understanding fear. So for you to understand fear, you need to know what fear is and where it comes from. So fear happens in all traders, especially new traders. So they could be fearing that if they enter a position that they're going to get stopped out, and they are fearing that they're going to lose money. However, this is one of the outcomes that could happen in trading, where you get stopped out and you lose money. However, you actually need to eliminate this fear factor that is coming into your mind, because ultimately, again, this will affect your decision making and your thought process in the markets, and therefore this will reflect on your trading history. So basically, before you're entering a trade, you need to understand your risk, how much you're actually risking per trade. So if it's 1%, and this will therefore help you understand kind of the fear and try and eliminate that fear. Because once you actually acknowledge that fear is in the markets, it's more easier to overcome this and combat this fear aspect. So that's one main decision that needs to be eliminated in all the traders. The next one is making snappy decisions in the markets, and this is based all around your emotional thought process. So this could be, for an example, you're in a trade and you're following your analysis correctly. However, you've just seen like a big, if you're short in the market and you've just seen like a big bullish candle, straight away the emotions are kicking in, and you're thinking, I need to close this trade now, because your emotions are in this trade. So making a snappy decision like this and you close the trade straight away, this isn't something that will you will benefit from, because there needs to be some sort of thought process behind why you're closing this trade. It shouldn't be based on just emotional, basically your emotions. You can't allow the emotions to get in the way of your trading system and your strategy. You need to follow your strategy to the exact pinpoint accuracy, and not allow any emotions to come into play, and therefore not allowing you to make these quick, uneasy, snappy decisions that ultimately will make you a not consistent trader. So that's the next one. And then we move on to overcoming greed. So in the markets, greed can become a very big issue, especially for some traders that are new to this market and they start experiencing some winners. So let's, for example, say they go on a couple of winning streaks, 4 to 5 trades in a row. Straight away, you're going to get overconfident, potentially, if you're not in line with your emotions and your overall thought process. So once you're becoming overconfident, you then start potentially seeing setups and trades that actually aren't there. They're just in your mind. So you're not looking exactly at the chart. You're kind of looking at the chart on what you want to happen, because you've just won the last 4 to 5 trades. Now I'm in the thought process, oh, I'm a god at trading, and I'm going to start over leveraging my account, and then that can also lead to over trading. Another example is here where I've said in the Wall Street, and there's an old saying in Wall Street that pigs get slaughtered, meaning, let's say you've got a trade and you're trying to extract every single pip and every single last candle out of the market. This is not a healthy attitude to have, because sooner or later, as I say, the trend doesn't. No trend is always bullish, bullish, bullish. The market has cycles, and if you're trying to extract every last pip and monetary value out of this trade, because sooner or later this trade is going to reverse against you, and then potentially you've just left all that profit that you was seeing on the table, because you're thinking, okay, this trade can keep going and keep going uh, until basically you're happy with the profits. But this isn't something that you should be incorporating into your strategy. And to stop this from happening, this is why you should be following your trading strategy and your trading plan with great accuracy, because if not, these type of things of becoming greedy also step into the market. So it's something that you need to eliminate. And also in life, not just in trading, if you do think you are a greedy person, as I say, this isn't just due to the chart. If you're a greedy person in life, it's something that will reflect on your chart work and will reflect on your results. So definitely just have a little think. It might be worth just having a little hour or two, just actually going through some of these key points I've highlighted, and just ask yourself the question: am I this type of trader? Am I an over greedy trader? Do I make snappy decisions? Do I sometimes not get into a trade because it's solely based on my fear and the fear factor that is coming with potentially the last couple of trades? If I've lost a couple of trades, the fears creeping in that you're going to lose again. These type of things is worth just asking yourself the question, and then if you're answering yes to any of them, that's the first step to actually overcoming this, by acknowledging that you have this slight issue and that it's just a hurdle that can be overcome by working on your mindset and having a tunnel vision that is just literally focused and blinkered in on the chart, and allowing every emotion to leave your head and just focus on price action and what the market sentiment and price is telling you. Okay, so how to improve your trading psychology? Again, as I've said, actually identify what type of person you are, whether you're a very emotional person, what do you have strong biases? So once you've got a thought process in your head, is it very hard for you to change this thought process? And ultimately, what type of personality you've got, because the personality you've got, just in general aspect in life, will also reflect on the type of trader you are. So let's say, for instance, I'm a very risky person in life. I like taking risks, or I'm not a very patient person in life. All these aspects are going to reflect in your trading and in your trading journey, and are not very good aspects to hold within this trading journey. So examples, if you're a naturally confident person, you may find that you're again overconfident in the market, and you're seeing sometimes positions that aren't actually there. That's one of the big aspects when you are overconfident. Example, you might let your losses run. So if you're in a trade and potentially you've got a stop loss, but it's quite far, price is quite far away. When price starts getting near your stop loss, a lot of traders will then start moving your stop loss maybe 2-3 pips higher. And ultimately, when you're doing this and moving your stop loss higher, this is then again starting to affect your risk to reward and your overall strategy. Because let's face it, would you rather get stopped out, say for 40 pips, and you've just got a £5,000 loss, or would you rather get stopped out for maybe 5 or 6 pips and only take a £200 to £300 loss? As I keep reiterating, you want to always cut your losses short. You never want to find yourself, when you're looking back at your statistics, you should never find that you're holding losing trades longer than you're holding winning trades, because it's not a sustainable plan, and you will get caught out by the market very soon. And this will change your decision on the market. But in reality, you're fighting a losing battle if you have this type of mindset in the markets. So what would you rather do? Have a big loss, or just incur little small losses? But overall, in the big picture, you're letting them winners, once you catch a nice trade, you're letting them winners run. Not becoming over greedy. You're not becoming over greedy. It's you're following your strategy and your risk to reward, as I keep saying. So that's something that there's sometimes a fine line between letting your position run to your take profits and then becoming over greedy. I'd say you're becoming over greedy if you start opening your TP up after prices nearly surpassed your take profit levels, and you start opening your take profits up. That's when the greed starts coming in, because you think, okay, this can carry on running. I want more money. I want more pips. It's not a good attitude to have. So that's how you can improve your trading psychology in a way. And then I've got 7 tips to avoid emotional trading. So number 1 would be, as I've said before, to identify your personality traits. So what type of personality have you got? There's a good website I will put in the group chat on how to actually, there's a bunch of, I think it's like 20 or 30 questions that you answer, and it basically tells you what type of personality you have. And it is trading related as well. So that's something that you might want to have a look at. I will post it in the chat after this webinar. So once you've identified your personality, then you've got a better understanding of what type of person you are, and then therefore this will reflect on the charts. Second, this is the most obvious, you should all develop a trading plan. If you don't have a trading plan, you are setting yourself up to fail. That is a fact 100%. If you're not following no plan or no strategy, you're just doing this like sort of willy-nilly, and you're just pulling trades out of thin air, and you're not following a processed, systematic approach, then you are going to fail. So everyone should develop the trading plan. I have put in a whole setup of how to develop your trading plan, and basically a step-by-step guide on questions to ask yourself to follow. Again, that's in the group. If anyone needs me to send it to them, give me a message and I'll send it, no problem. But once you've actually developed your trading plan, it's then it can be an issue actually following this plan. And so it could be one thing actually developing it, the next thing is then actually following it to the T. If you're not following it and you're breaking rules in your own trading plan, again, this is not a good approach to the markets, and you will ultimately fail. So once you've created that plan, you've created it for a reason. Put another rule at the end. If you've got 10 rules, make the 11th rule that you're not going to break them previous 10 rules, no matter what. And if you feel like you might potentially start to break a rule, come off the charts and come away, maybe take a day or 2 off, because you will benefit from this in the longer term. Trust me on this one. So if you find yourself, maybe you've had a trade where you've broke your rule, and then even if it's a win, it's not a win in reality, because you've broke your rule, you've broke your trading plan, and you've not stuck to the trading plan. So that's something that you really need to do once you've developed that trading plan. Follow it to a T. If you're following it exactly, and maybe you're along with your strategy and it's not working, then that's where little tweaks start coming in. asking yourself different questions. But if anyone's got that issue, again, we'll book in a one-to-one call and I'll go over all these type of issues with you and how we can overcome this and combat these issues. Number 3, always have patience in the market. People who've got patience in the market will be rewarded big time. And it's not, the patience isn't, it's not as if, oh, you're running in a minus, so you're running in a drawdown on your trade. It's in the red. This doesn't mean have patience with this. Ultimately, if you're running drawdown and you're running in a trade that's in a loss for too long, the exact thing is it's too long. You don't want to be in a trade. So that's not what I'm talking about. I'm just talking about if the market's consolidating around your entry or even while it's running in profit, just have patience with the market, because as I say, once you've got consolidation in the market, the longer the consolidation in the market is, the bigger the breakout when it occurs happens. So if we're consolidating for maybe a couple of hours or even a couple of days on some of the pairs, once we do get that break of the structural consolidation, this pair will then fly and move. That's just it's a known fact. The longer the consolidation, the bigger the breakout happens and the faster the momentum kicks in. Always have patience in the markets and always be adaptive in the markets. When you enter in a trade, it's, you can't stick to that. If you say, for instance, you were short in the euro and euro USD, and now you've got that bias in your mind that you're only shorting and selling the euro, even though price action now is telling you it's becoming bullish and potentially it's now made a higher high and now it's just confirmed with a new higher low. That right there is how you need to adapt to the markets and adapt to what you're seeing on the price action. So that can save you quite a lot of losses. It can also make you take the profit that you've got already on the table and you're not leaving any more profits on the table. So always adapt to the market and just adapt to what you're seeing on the charts. Don't adapt to what you think is in your mind. Adapt to what you are seeing. And then potentially take a break after a loss. I'd say if you go on a couple of bad losing streaks, if you're on a couple of trades and you are now on a losing streak, it might be worth just taking a break from the charts. Potentially, even if you take a loss for the day, just go for a walk, clear your mind out, and just have a little think about what you could have done different in this trade. When you look at it from when you're not, because when you're not in the trade, you can see the market's kind of clearer and you can see it from a different angle and perspective when you're not in the trade. So that's something definitely you should do. If you've gone on, maybe you've had a losing week, that's, people have losing weeks. It's nothing, it's not a major issue. It's just a little problem. And then maybe potentially you want to have a couple of days off from the charts, just spend some time with your family or friends, or just something to keep your mind occupied away from the charts. Because it's not like, oh, if I take 2 weeks off from the chart, I'm going to forget everything that you've learned. This chart work and everything that you're learning, you won't forget. I guarantee you right now, if you've been in the markets for say a year, say for instance you've been in the market for a year and then you take 2 to 3 months off the charts, I guarantee you when you come back after these 2 to 3 months, you will see the markets from a different angle. You won't forget what you've learned. It doesn't happen with trading. You don't forget once you've learned it, the skill, you don't forget it. So that's not even that shouldn't be an issue if you think you need to take a week or 2 off. I know some people who've took a month or 2 off, as I've said, from the charts. Like over the Christmas period, I tend to take 2 to 3 weeks off the charts myself, just as liquidity dies down. That doesn't mean to say in them 2 to 3 weeks that I'm rusty. Trading doesn't work like that. You could potentially say that if it was a physical sport, but with trading, that's nothing to worry about. So don't ever feel bad for just taking a week off or a couple of days off. It's more than necessary and needed, especially if you are going on a couple of trades that are now in a losing streak. So that's definitely something I would 100% recommend you do. And then another thing is, this should be accept your losses. So accepting your losses is another important part of trading. So it's one thing having a loss, but actually accepting your loss is a great skill to have. So my personal outlook on the markets, anytime I'm entering a trade, I know my exact risk, which is normally 0.5% I'll risk per trade. So straight away, when I enter this trade, in my mind, before it's even gone into profit or loss, in my mind, I'm taking this as a loss. So I'm already expecting a loss and the worst, so to say, possible outcome from this trade. Having the worst possible outcome, having that thought process of the worst possible outcome from the trade is a really good skill to have, because if you do then get stopped out on a trade and there is a loss, you've already anticipated this loss happening. So it's no shock to the system and you can handle the losses a lot better by having that mentality. So that's something definitely you should do. Always accept your losses and then learn from these losses. A loss, really? Is it really a loss or is it a lesson? That's what I'd say. It's a lesson that you need to learn, and just look what you could have done different. And then the seventh one is always keep a trading log. So a trading log is basically just a history of all your trades you've performed throughout the week. So personally, what I do is I'll write down just on a notebook, pen and piece of paper. I don't really like to, these are a couple of apps that you can use for the trading logs, but I just prefer the classic style of pen and piece of paper and just write key information down, like so like the date you entered the trade, the time you entered the trade, what session the trade was in, also what your mood was when you was entering the trade, whether you was in, because ultimately your mood will affect how you see the market as well. If you're angry, you're going to see the markets completely different. Also what your TP and SL levels were, and along with your entry. And then also I'm just trying to think what else there was one more point. If I come back to it, I'll write it down for you. But they're the main type of things you need to look. So then on a Friday and on a Saturday or Sunday, you can then look over at your trades you've been taking. So on average, I'll probably take about 5 to 10 trades per week on average. So then I'll look over these 5 to 10 trades and look more specifically over my losses. The winners I'll still look over on how potentially I could have extracted a few more pips or reduced my risk within the markets. But I'll look over with more emphasis and focus on them losses again and learn my lessons from them losses. Just because you have a loss and now you've said, okay, that's a lesson, I'm not going to do that again, that doesn't mean you're not going to get a loss again. Of course, you're going to get more losses. It's part of trading. If you don't like losses and you don't like losing, you're in the wrong market, because in the Forex market, in any market, whether that's the stock market, the crypto market, you are going to experience losses. And it's something, again, you need to accept and get over and overcome this mindset of, oh, I don't want to take a loss. Because if you're not trying to take a loss and you keep moving your stop loss or don't even have a stop loss, you're going to wipe your account and you're going to take some huge losses in the market when that's not your job. Our job as a trader is to extract as much amount of pips from the market while reducing our risk to a minimum. So number one rule is capital. Capital. You don't want to lose any capital, so you need to preserve that capital, and that's the number one rule. If you don't see no setups, you don't take the trade, because you don't want to put unnecessary risk on the table. You just wait for the setup to occur. So these type of little things, again, I'll put this PDF in the group on Telegram, so you can have a little bit more clearer look. Also, there was a story that also stuck with me, which was basically it was a movie called Cool Hand Luke, and basically it was about, he was a gang member. I think he was based in America. He was a gang member. Anyway, he got put in jail, in prison. However, he escaped prison one time. The guards and the prison officers caught him, brought him back to jail. However, a couple of weeks later, he then tried to escape again, and this time the guards caught him and told him, if you try to escape again, we will kill you. So straight up, we will kill you. And also that he took a numerous amounts of beatings on that second time he come back into jail, numerous amounts of beatings. And he told them, if you escape again, even if you try to escape and you don't successfully, we will kill you. And he said to him, have you got your mindset right yet? So that's the most important point of this story. Have you got your mind right yet? That's a question you should always be asking yourself. And then basically what happened, he didn't respond to this, and he come back to the prison. What happened again was he then tried to escape again, and then the guards went through with what they said, and they killed this Luke clean off. So you might want to think, how does this relate to trading? So how this relates to trading is you need to get your mind right, because ultimately, if you're not getting your mindset right, you will be killed by the markets and you will suffer huge losses, which instead of dying, we're not going to die, but we will suffer financial losses if you're not getting your mind right. So you always need to keep asking yourself at the start of every session, at the start of every day, and even before you're taking a trade, are you in the right mind? This is a key question that you should always be asking, because another point is, like, people see only what they want to see. So this can come down to, let's say for an example, when you first started trading, you looked at the charts and thought, like every single person who doesn't trade, what the hell's going on here? I'm just seeing lines and squiggles all over the place. But really what's happening here is the energy inside your mind and body is blocking you from actually seeing what is going on in the markets, this energy. So once you learn this, you then start opening this energy up, and your eyes become more apparent to the markets. So that's always something good. So something to take note at. And also another story is it's a child with there was a story with a child. Basically, he was a 2 or 3 year old kid, and he was in the park, and then there was a dog running around the field, and then the child has gone over to interact with the dog, or the dog's come over to interact with the child. However, this child has suffered a huge bad experience as the dog's bit him and took one of his fingers off. So as you can imagine, this would be a huge bad experience for and very traumatic for the kid. So later on down in life, he's now scared. Anything he sees with the dog is associated now with fear. And necessarily he could meet 2 to 3 years down the line, he could meet the friendliest dog in the world, but because he's experienced this bad experience a couple of years ago, straight away he doesn't want to know, and he just wants to get out of that situation as quick as possible. So that's something to take in mind, especially when you've how this relates to trading is when you're taking losses and you've had a bad experience with the losses. Don't let that loss then interact with your experience you're having right at this moment by taking this trade. Just because you had losses in the past doesn't mean that you're going to carry on having losses. Just like the kid who had a bad experience with one dog, which is very rare to get bitten by a dog, because if you're meeting dogs, probably 99% of the time the dog's not going to bite you. But because that 1%, that one time he got bitten by the dog, the rest of the dogs he's now seeing as a bad experience, and he wants to get away from them. So that relates to the market with your losses, and do not let your losses incorporate into the trading style you are having right now. Okay. And basically what you want to do is you want to get into the opportunity flow. So I always talk about this is opportunity flow in the markets. Once you are in the zone, this is where opportunities start to arise. And actually what I mean by getting into the zone in the markets is, I mean, when the market and your mind are in sync and linked up with each other. And also this means that the market and your mind are in complete harmony with each other. Again, how you develop this comes with time and experience and skill in the market. But definitely that's when it opens up to the opportunity flow, where you start seeing nice cycles in the market and nice opportunities start to arise from the markets. So that's definitely something that you need to just take into consideration on how to get into the flow, and how you need to zone in on the market and let your mind and the market become in sync and link up together, which then results into having good harmony with the markets. So has anyone got any questions? Because this is all I've got planned for this evening on the psychology. If anyone's got any questions, just put in the chat now, and I will answer the questions. If not, we will do another webinar tomorrow. I will confirm the time this evening, and the webinar tomorrow will be also about just how the markets are moving and what we're seeing in the markets. Just basically just having an overview of the week and how we could combat any losses or just what we're seeing in the market. So if anyone hasn't got any questions, I have recorded this webinar, so definitely if you are suffering any losses at all, or just having difficulty with your mindset and psychology in the market, definitely save this video when I post it and just have a little rewatch. It's never going to hurt you just to have a rewatch, and could give you that little bit of push and confidence, so to say, into getting back into that opportunity flow, and again getting in harmony with the market. Okay, how do you stay motivated with losses or slow moving markets? So staying motivated with losses, I treat my losses, because I treat my trading as a business. So I treat my losses as a business expense. Every business has an expense and every trader has a loss. So in the grand scheme of things, if you're risking 0.5% or 1%, losing 0.5% or 1% of your account, it's not that big of a deal. And I know that the profits, because of my risk to reward, the profits are going to be 10 times, 5 to 10 times bigger than what my losses are. So that's how I'm always staying motivated by that. I won't look at this loss and think that's it now, I'm finished with trading, because if you do that, then you're not going to become a successful trader. So always just try and motivate yourself. Always look at the positive sides. You always need to look at the positive side. Always come into the market with a positive reaction as well. Do I trade on NFP? No. So I won't trade on NFP. I won't enter any positions around NFP. I'll just like to stay clear of the non-farm payroll tomorrow, which is occurring tomorrow. So potentially, if I am already in a trade, what I'll do, if the trade is around my entry, I'll just simply close the trade. If I'm running in a minus, if I'm running in a slight couple of pips loss, I'll close the trade. Simple as that. If I'm running maybe 30, 40 pips profit, I'll reduce my risk. So I'll potentially take some profits off the table, and I'll 100% put my stop loss to break even. So that worst possible outcome would be just getting stopped out at break even. But I tend not to trade NFP or enter any positions around there. It's just too much volume entering the market. As you can see today, we just got a huge drop on the euro because the dollar gained some strength. This, in my idea, is because of the anticipated results that will be coming tomorrow. Any books you'd recommend on trading psychology? Yeah, so Trading in the Zone is a great book for your trading psychology. So yeah, Trading in the Zone is a great book to master your psychology. But I'll again post a couple of books, links to a couple of books. And in the mentorship, I've actually for the paid members, I will be posting some great ebooks that I have got access to. So the paid members will get all the access to. I think I've got about 4 or 5 books there that I will send in. King is mine. So his mindset's so strong because he's been working on it for the past, I don't know, 15 years. As you know, he's been in the market for 10 years. and he reads an astronomical amount of books and mindsets. So definitely just keep reading books about your mindset, and stuff like this. Even reading, there's a lot of YouTube videos out there on how to gain sufficient knowledge and again about your mindset. So definitely just keep learning and learning. Your mind is a very powerful thing, and we should always keep developing it. Okay. So that's all I'm going to be doing for this webinar. I hope everyone has enjoyed it and gained some knowledge from it. If anyone's got any feedback or anything at all, give me a message on Telegram and Instagram, and we'll really appreciate that. But other than that, I hope you all have a great evening, and I will see you all tomorrow at the webinar, which I will announce the time for a little bit later on this evening. But take care.